Using a down payment assistance program can be one of the best ways to get into a home and have more money in your pocket. So in this video, I'm going to walk you through how down payment assistance programs work. I'm going to go through the different types of down payment assistance programs available to you. This is really important to understand because they're not all created equal. And then I'm going to tell you about one of the better down payment assistance programs that's available nationwide. So let's jump into it. Hey, what's up guys? I'm Ben Sund. Welcome to my channel. If you've been here before, welcome back. If this is your first time, welcome for the first time. I don't just talk about buying homes at zero cost to you. I also talk about things like personal finance, investing, and real estate. So if those things interest you, please hit that big red subscribe button. All right, so first things first, it's important for you to understand how a down payment assistance program works. A down payment assistance program works in addition to a regular mortgage. So let's say you go to your lender and you apply for a 3% down conventional mortgage. The down payment assistance program doesn't override that conventional mortgage. It works in addition to it. So you apply for a 3% down conventional mortgage, and then you or your lender, most of the time it'll be your lender, will apply for the assistance program. The assistance program will then act as if you were putting that money down. So when you close on your mortgage, you will have equity in the home like you put 3% down. It's not a separate loan and it doesn't take over a regular conventional mortgage. It literally just acts as if you put a down payment down. So there's no additional debt. It's like you just put 3% down. Now there are some caveats to these programs, which I'll cover in just a second because I'll go over the different types of down payment assistance programs. But it's literally just acting as your down payment, so you instantly have equity in the home, like if you put your own money into the transaction. Now, there are a few different types of down payment assistance programs, and it's really important that you understand which one you're signing up for, because if you don't, you can get yourself into a bind, which I'll highlight more in just a second. So let's walk through the main types of down payment assistance programs. So the first type is called a repayable second mortgage. Remember just a second ago when I said you have instant equity into the home because it's like you put your own money into the transaction? Well, some of these programs put a second lien on the home as a second mortgage that's repayable when you sell, pay off, or you try to refinance. So this type of down payment assistance is very common. Most of them don't have an interest rate and they don't have a monthly payment. So you don't actually pay on the loan. You just have to pay it off when you go to refinance or you go to sell the home or go to pay off the home. Now, the issue with these types of down payment assistance programs are, let's say that you bought your house, you've been in it for a few years and the interest rate drops. So now you want to refinance your home. You might not have the equity in your home because you have to pay off that second mortgage. Let's say it's $10,000. So you would have to refinance your house and pay off that $10,000 as part of the refinance in order to refinance and drop your interest rate. Generally speaking, you would have to have been in the home for a couple of years and you would either have to pay down that amount to get that equity, or the home value would have to go up in that amount of time. And again, these are very common down payment assistance programs, and they're really perfectly fine. You just have to understand going in that you're gonna have a second mortgage that has to be repaid, either by refinancing or selling the home. You just have to understand that you need a little bit more equity before you can do those things, or it's gonna cost you out of pocket. So the second type is called a forgivable mortgage. It's a lot like the first type, only it gets forgiven. You don't have to repay it at all. But it's forgiven only when you meet certain criteria. Those are usually time-based criteria. So it's once you've been in the home for say 3 years, then the loan's forgiven. And again, it's just important that you understand the criteria for these before you get the program, because it could limit your ability to refinance or sell, or it could just mean that you have to bring more money in if you don't have the equity in the home. These types of down payment assistance programs are pretty cool because it's effectively free money if you're planning on staying in the home for a while. Again, if it's a 3-year program and you're planning on staying in the home for 3 to 5 years, it could be a really great way to get you into that home with not much money out of your pocket. Now, the third type is a low interest second. This is probably the worst type of down payment assistance. It's basically you're taking out a second mortgage on the house right away in order to purchase the home. And it carries a monthly payment and you have to pay interest on it. It's effectively like putting it on your credit card and then paying it off as you go along. Again, I would steer clear of these. They're not the greatest way to purchase a home. You literally have no equity in your home at that point, and you're paying on 2 mortgage payments. And nowadays, these aren't very common. A lot of lenders don't really offer this or suggest this type of program, but they are still out there, and you want to understand that this might not be the one for you, or it might be worth taking a little extra time and saving up for a down payment, or finding another down payment assistance program. And the fourth type, I don't really have a name for it. I just call it free money down payment assistance. They're not super common, but I'm starting to see them pop up more and more. They're usually offered actually by a lender or a nonprofit, and it's basically free money. They're offering you free money. It's not repayable. There's no strings attached. They're just offering you free money to purchase a home and use them as your lender. Again, these aren't super common, but you can definitely find them. They're programs that are first come, first serve. So once the money runs out, they're gone. And depending on their funding each year, they could be just completely removed from the lender. Again, I'm starting to see them pop up more and more because the housing market's starting to slow and lenders want to drum up business. Usually they're not a ton of money. Usually they're like $2,000, $3,000, $4,000, $5,000. But it might be $2,000, $3,000, $4,000, $5,000 less that you have to come up with. Now, these are generally first-time home buyer only, and they usually carry an income qualifier, meaning you have to make under a certain amount of income for the area to qualify. And usually that income's fairly low. It's usually below $40,000. It just depends on the area that you're at and the lender's qualifications. And again, these are gonna be lender and nonprofit based, so they're generally gonna be localized. So it might take a little more searching for you to find one because they're gonna be specific to your area. There's not too many national ones that I know about, but if you can find one, it'll be one of the best ways for you to get into a home with as little money out of your pocket as possible, and you don't have to repay it later on down the line. All right, now that we understand how down payment assistance programs works and the different types of DPA, let's cover one of the cool DPA funds that is available nationwide, and that's going to be the National Homebuyer Fund. And just as a side note or a caveat, I don't work for the National Homebuyer Fund. I don't actually do those or offer those mortgages myself. This isn't a paid sponsorship. I don't get anything from it. I just think it's a really cool program that's helped out thousands and thousands of families, and there's some pretty cool benefits to it that other programs don't have. So the NHF works in one of two ways. One, you can get a grant for 5% of the loan amount that can be used towards your down payment, your closing costs, prepaid taxes and insurance. And one of the cool things is this is one of the free down payment assistance programs I was talking about. It doesn't have to be repaid, and there's no second lien on your home. It's just a free 5% down. Now, the second way is actually a second mortgage, but it's an interest-free 0% interest mortgage that's forgiven after 3 years. And it can be used for down payment, closing costs, and prepaids, just like the grant. One of the nice things about these programs is that you don't have to be a first-time home buyer. You can be a repeat buyer as well. Generally, you can't be buying like a second home or an investment property. It's got to be a primary residence. But you could have bought a home before and now use this program to buy another home. Now, there are a few requirements. They're not too strict, but let's cover those. So one, you don't have to be a first-time home buyer. Like I said, you can be a repeat buyer. The other is that you have to be low to moderate income for the area. So it's really targeted to lower to moderate income. If you're higher income, you won't qualify for one of these. And generally speaking, you're gonna have to have at least a 640 credit score, and you can't have a debt to income ratio above 45%. So over 45% of your income can't be going towards debt, including the payment on this home. Now, one of the cool things is that this program, like we talked about earlier in the video, isn't a separate loan, so it can work together with conventional FHA, VA, and USDA rural development. Now, the other cool thing about this program is that you can use it in conjunction with another down payment assistance program. So if one of these programs doesn't cover all your down payment assistance and closing costs, you can combine them together to get what you need or get whatever you need covered. So you could effectively be going into your home with zero out of pocket. So there are a couple limitations to this program, and the obvious one being is if you get the second mortgage loan, then you kind of have to stay in the home for 3 years, because if you don't, or you try to sell, or you go to refinance, you would have to pay that money back. Now, the second downside is that not every lender does this program. So you're gonna have to call them and ask what lender in your area works with this program. And one of the downsides to that is you're not really gonna be able to rate shop that much. You're kind of going to have to go with whatever rate that lender has. Most lenders are pretty competitive and they can price match, but you may find that this lender that you have to work with to get this program, you might find that the lender, has certain fees that you don't like, or might carry a higher than expected interest rate. Again, you're going to be slightly limited on being able to shop lender to lender. If you want to find alternatives to this program or see what's available to you in your area, click that video right there. And if you have any questions, comment down below. And if you got any value out of this video, please hit that big red subscribe button, and we'll see you on the next one.